What's up guys, it's Humphrey. Welcome back to my channel. Recently in my real estate versus stocks video, I jokingly asked you guys if I should compare the differences between Bitcoin and Pokemon cards as an investment. So that prompted a slew of comments from you guys. I don't know what I was expecting. I guess I kind of expected you guys to ask me to do that. It was kind of just a joke, but now that it's real, I'm here and I made a video on it. So let's talk about the merits between Bitcoin and Pokemon cards. And to do that, I had to go on my own little journey, and I would even call this a Pokemon journey.
Very best, no one ever was.
And what I basically concluded was that Pokemon cards and Bitcoin, they're completely different investments altogether. For example, Pokemon cards are physical versus Bitcoins are digital. Pokemon cards are mostly sold by emotion and nostalgia, sweet, sweet nostalgia, but Bitcoin, on the other hand, you can't really get that nostalgic about a Bitcoin. It's not like someone's looking at their Bitcoin wallet from 2013 being like, oh man, I had so much fun playing with my Bitcoin back in 2013. So while these two assets, Pokemon cards and Bitcoin, are completely hard to compare each other against, that's not what today's video is about. Today's video is about, objectively speaking, if we had to compare the two, how would we do it? How would I evaluate the merits of Bitcoin versus Pokemon cards? So that got me thinking, well, Humphrey, how would you actually evaluate a speculative investment? And that's what we're gonna talk about today. So first, I'm gonna tell you about how to evaluate an investment that's rather speculative. Two, we're gonna go into the differences between Bitcoin and Pokemon cards and the merits for both of them. And lastly, I'm gonna tell you exactly what I would do if I had just a little bit of cash lying around for a purely speculative investment, such as perhaps Pokemon cards. So let's get into number one, what makes a good speculative investment? In my opinion, a good speculative investment has four different factors. So the first is that it has a good risk to reward ratio. We want an investment with somewhat of a risk, but the potential upside should be 10, 20, 30, 40x. The second factor I like to look at is to see if this investment is pretty liquid. So can I get my cash in and out of it pretty quickly? Because of the speculative nature of a speculative investment, if there's ever an economic downturn or recession, we're going to be wanting to get our cash out of it as quickly as possible. So it's important that this investment is liquid. The third factor I want to look at is this investment fairly valued? So we don't want to be overpaying for this investment. Good investments are usually purchased at a good price, and also the underlying value of the asset needs to be considered as well. So fourth, how does an asset's underlying value change over time? Well, I'd argue that the underlying value of the asset needs to have some sort of intrinsic value, or at least be in demand. As long as there's demand for this underlying asset and more of this underlying asset cannot be produced and the demand is continuing to grow, then the underlying value of this asset should grow over time. Okay, so let's talk about first Bitcoin as of recently. Now, you guys should already know this, but Bitcoin is a digital currency that's grown a lot of institutional acceptance over the past 3 or 4 months. As of October 21st, 2020, basically PayPal announced that PayPal and Venmo will both start to accept cryptocurrency for all of their online payments and platforms in the future. Now, when they announced this, basically because there's only 18.5 million Bitcoins in circulation with only a total of 21 million Bitcoins to ever be created, that crazy amount of demand from that PayPal announcement basically drove the price up because there's so much demand and a limited supply. In fact, Bitcoin was trading close to $40,000 per coin in December of 2020. But that fervor didn't last long because last week, Bitcoin basically took a huge tumble and went down 25%, trading at almost $30,000 per coin last Thursday. Now, there are two main reasons why the price of Bitcoin really slid last week. And the first was that there was a report published that said that someone was able to double spend their Bitcoin. And what that actually means is that they thought that somebody was able to double spend it, or basically spend their own Bitcoin 2 times in a row. Now, the report just ended up being a false alarm, but the mere threat of someone being able to double spend their Bitcoin nearly catastrophically crashed the price of Bitcoin. Now, that same day, Treasury Secretary nominee Janet Yellen actually made some really negative comments about Bitcoin, saying that it was the main way that terrorists use to finance their illicit activities. She suggested that lawmakers take a look at cryptocurrency a little bit closer and actually suggested curtailing the use of it in the future. So these two main pieces of news basically tanked Bitcoin's price temporarily all the way down to $29,000 or about $30,000 per coin. Now, while it is a risky proposition due to its volatility, I would actually argue that its potential to actually 10x or 20x as an investment is there. In fact, many of the people that actually bought their coins at $1,000 per Bitcoin have already 20, 30, or 40x their initial investment. The other great thing about Bitcoin is with the advent of these new exchanges such as Coinbase, you're able to get in and out of Bitcoin pretty much whenever you want. If you ever needed to liquidate your Bitcoin for cash, you can do that pretty easily these days, unlike in 2013. So that makes it a pretty liquid investment. So liquidity is important for speculative investment, as I said before, because in an economic downturn, if you need the money, then having an investment that you can cash out for your money is going to be important. Now, if you're asking me, I'm not too sure how to value liquidity in general. Like, some people really prefer a lot of liquidity. Some people don't mind not having any liquidity at all. Now, you're just gonna have to assess whether that's important to you, but basically, in my opinion, it's always good to have liquidity because in case anything bad happens, you can always get your cash out quickly. In terms of maintaining its fair value, I would actually argue that Bitcoin's market is actually quite large. A lot of the Western world is into Bitcoin, or at least knows what Bitcoin is. Since the supply of 18.5 million Bitcoins available is pretty small compared to how big the market is, I think that the underlying value of Bitcoin is always going to be there just because the demand for it is going to be growing and the supply is going to stay the same. Not to mention, there are a lot of institutional investors in Bitcoin, such as many large banks, as well as the FBI, which supposedly has over 144,000 Bitcoins after seizing the Silk Road marketplace back in 2013. So just by looking at my criteria for a speculative investment, I would actually say Bitcoin, not too bad because it has a lot of things going for it. A lot of people are believing in it. And as long as you believe that other people will continue to believe in Bitcoin as a decentralized currency, then it's not such a bad investment at all. Now, I'm still sticking with my view that Bitcoin is a rather speculative investment. And if I'm giving myself advice as a long-term investor, I'm probably not putting more than 3 to 5% of my portfolio into Bitcoin. However, if anything, it's a good way to diversify your portfolio. So that's always good to have. But let's talk about what we really want to talk about today, and that's Pokemon cards. This whole craze for Pokemon cards has really taken off in the last year. Just taking a look at the Google Trends graph for Pokemon cards in the last year, it's hit the score of 100 multiple times in Q4 alone. This was a combination of a few factors, but YouTuber Logan Paul, with over 22 million subscribers, definitely had something to do with it when he posted 3 videos about Pokemon cards back last year. As of late 2020, a PSA 10 base set first edition Charizard, that's a mouthful, sold for $183,000 to Rapper Logic. And if that sounds like complete gibberish to you, well then you're probably pretty normal as you're watching this video, but if you do know what PSA stands for, then my guess is that you've probably watched a few of these Pokemon card videos. For those of you that don't know, PSA stands for Professional Sports Authenticator and is a company where you send them your trading cards and they basically grade them for you as a service. By having a PSA grade, your card's quality is assessed, and the highest grade you can have is a PSA 10 mint condition, which according to the website means that a PSA Gem Mint 10 card is a virtually perfect card. Attributes include 4 perfectly sharp corners, sharp focus, and original gloss, yada yada yada, you get the point. So essentially, the more mint condition a card is, the more rare it is, and the more rare it is, the more it's going to go for an auction because people pay a huge premium for basically perfect quality stuff. But are they actually a good investment? Let's talk about that because they are completely different than Bitcoin. So let's talk about why it's different and if it still qualifies as a good investment. So first, Pokemon cards are different in the following manner. Number one, they mostly are sold based on emotion and nostalgia. The underlying value of the card really just depends on how big the market and the demand for these cards are. And a huge reason for that demand is basically emotional and sentimental value. In fact, the sentimental value piece is so important and should not be overlooked because you could get a collector that has, let's say, a $250,000 card, basically a card that's worth that much, and he or she might not even be willing to sell it.
I was holding one of the rarest Pokemon cards in the world. This was my mission objective, but right as I was about to present my offer, things took a turn for the worst.
I get 20 messages a day from all the big guys. Justin Bieber contacted me, wanted them. Gary Vee, they all want my cards, and I just don't have the heart to give them up.
Sometimes the pain of letting go of a once-in-a-lifetime card is so great to that collector that they have a hard time basically valuing how much they should even sell it for. Now, that's something you just don't get with Bitcoin. No one is looking at their Bitcoin wallet being like, oh man, this is a once-in-a-lifetime opportunity for me to have this particular Bitcoin, and oh my god, I'm gonna miss you so much if I give you away. No, that doesn't happen. A Bitcoin seller just sees the price go to, let's say, 50K a coin, 100K a coin, and they're like, all right, see you later, I had a great time with that. The other thing with Pokemon cards is that knowledge plays a huge factor when it comes to the value of the Pokemon card itself. By having a ton of knowledge as to where the card came from, the history of the card, maybe if it's a good condition card, how rare that card is, you're gonna have a huge edge over someone who's just a novice at Pokemon card trading. So the more knowledge you have in the space of Pokemon cards, the better investor you can be because you can start to identify good investments when you see one. Bitcoin, on the other hand, doesn't have that knowledge gap. It's basically just there. Now, there are some other inherent risks that that Pokemon cards naturally have. After doing some research online, I came across a Reddit thread by a 20-year veteran of trading card games and collectibles. Reddit user The Cardpletionist has this to say, which you can basically pause the video to see his entire response, but I'll summarize what he says and why he thinks that Pokemon cards are a bad investment. First off, he says Pokemon cards are luxury goods, and I definitely agree with this. The definition of a luxury good is the following. So it's a good in which demand for it increases more than proportionally as income rises. Essentially what that just means is that when cash is flowing, more people are willing to purchase this item. It's like a country club membership. If you have the money to buy a country club membership and the cash continues to flow, then you'll probably opt for it. Now, when the economy goes down, what happens? What's usually the first thing to go? It's usually somebody's country club membership that they like to sell. So a luxury good is not a necessity, and so when the economy starts to tank or takes a downturn, for example, people are not going to be buying Pokemon cards to live. Now, while that holographic Charizard has a lot of fire coming out of its gigantic mouth, it's not going to keep you warm during a cold winter and an economic recession. Just saying. Cardpletionist goes on to say that back in 2008 and 2009, during the financial crisis, that cards were actually really hard to resell and the values of them plummeted. I mean, there's not much more to say there. That's a solid deduction. Thank you, Cardpletionist. Let's go on to the next point. And that is that they're not as liquid as you might think. Let's think about a stock trading account, for example. Let's say you have an account through Robinhood. By the way, use my link in the description below for 4 free stocks before February 1st. But let's say you had some money in your Robinhood account and you wanted to withdraw that. Well, you would get your money within about 3 to 5 business days. But if you needed to liquidate your PSA 10 Charizard, well, good luck with that, because even if you sold it for half price, I doubt you would find a buyer within 5 business days. So basically, the market for it is just a lot smaller, and because it's a lot smaller and the card is actually a physical good, it's a lot harder to transact and it's a lot harder to get your money out of. With that being said too, if you wanted to sell a less desirable card, let's say a holographic Chansey or a holographic Vaporeon, well, good luck with that. The other thing with Pokemon cards is that the nostalgia level for them is at its all-time highs right now, because everyone that was growing up with Pokemon is now of age to have some money to throw around and to actually buy these cards. Now, will this be the case in another 20 years? We may not know, because it really depends on the strength of the Pokemon brand and if they can keep that going for the next 20, 30, 40 years. So listen, at the end of the day, you really can't compare these two investments against each other. They're just completely different. However, if you are looking at it from a purely practical and objective standpoint, I would actually say Bitcoin is probably the better investment than Pokemon cards for the reasons of mostly liquidity. That and the potential market for Bitcoin is just a lot larger. Let me know if you agree or disagree in the comments, and thank you for putting up with me as I discussed a pretty trivial concept. Make sure to like and subscribe to my channel to get more videos from me every single week. If you'd like 4 free stocks from Robinhood whenever you deposit $1, make sure to use the link in my description below. The 4 free stock offer is good till February 1st, 2021. Lastly, thanks to all my Patreon subscribers. I really appreciate you guys being here. I will see you guys in the next video, which will be in a couple days here. All right, peace.